Alright, good day folks. It has been a while since I last made a video. I can't even remember when was the last time I actually made a video. But guys, this is more like a weekend edition. I'm going to be looking more into the correlations between crypto and collectibles. I kind of delved into it pretty significantly back in 2019, right? That was May of 2019, and I kind of want to share a little bit more about that because I realized that the space is showing attention on the NFT space, which is the non-fungible token space. So the NFT market, Nifty market, whatever you want to call it. A lot of people are buying and flipping digital art, virtual cards, or virtual collectibles, right? So I kind of want to at least identify, or how I want to put out my opinions or perspectives about that market portion, or that current hype train, right? I really feel that to a certain extent there will be sustainability, but at the same time it is one of the bubbles that is waiting to pop, right? One thing why I kind of want to why I feel it's a bubble, because firstly, don't forget that it's easy to buy and sell, right? When something is relatively easy to liquidate, right, and at the same time there is no real history, right, or at least claim that these pieces of artwork are really sought after, as in, when you say it's sought after, right, it depends on who is the market. So let me kind of correct that first. I understand that there are people who are buying into NBA Top Shop. There are people who are playing virtual games and trading their virtual items at really ridiculously high prices. But I want to kind of bring you back a little bit to why I stepped into the old school Magic the Gathering collection and why I feel it's significantly more sustainable than the Nifty market. Okay, so first and foremost, right, let's just put it into perspective. Everything so far I can safely say is driven by the weaker US dollar or weaker fiat, right? There's just so much economic turmoil at the moment and uncertainty, and more people are coming to the realization that holding more fiat isn't good. Okay, firstly, interest rates are at all-time low once again, all right? And don't forget that with continuous stimulus packages, monetary printing, people will just seek alpha. Okay, why did it suddenly just go down? Give me a second. Okay, so it's probably a passing cloud. All right, what's up, lawyer man? Okay, so as I was saying, so people are always finding alternatives, right? It is very natural. From the dawn of my grandfather's day to my father's time, for example, during our grandfather's time or our father's time, most of them will be looking at buying property, stocks, or building a business. Okay, let's just assume that building a business is in the realm of entrepreneurship. So it's a market, but it's not tradable, right? It's all really hard work, dedication. So let's skip that. Let's focus on what's considered a market, right? So you have the bond markets, you have property markets, you have stock markets, right? And of course, antiques, collectibles, art that falls into that category. So let's assume that everybody only knows how to buy property. Why? Property is a necessity. Whether is it because of land, whether there's land scarcity, for example, in Singapore, there's very little land because we're a very small island. You have, of course, prime areas like, for example, New York, you have London, you have Paris, right? All the key capital cities are always in the highest demand. And of course, as you evolve as a country, right, there are different cities that become more prominent in trade, in industrial, whatever, in terms of whatever industry that it booms in. For example, the tech space, for example, Silicon Valley, right? That those cities, property will thrive. It will be more and more expensive per square feet because more and more people want to work. Naturally, they don't want to be having to fly in, or obviously take a long train ride in. They'll buy the properties around there. So from a very simple perspective, you see the property market is one of the more sustainable key markets, right? And that's where our forefathers, our grandfathers, right, paved the way, and they became the rich, or at least at that time, how they become very, very rich. Because at the time, if you had money and you bought a plot of land in a good area where obviously you wouldn't know, it's a big myth, it's a big unknown whether that area will become popular. So what happens then is that they built their wealth over time. Then came the stock market, where companies, right, startup companies would so-called want to raise capital through an IPO, an initial public offering. So there was a demand for that. And of course, there's also the commodities market, but let's not deviate too far. I'm just trying to build that story up to where we are today and how the NFT space is going to really kick off and boom. But also the collectibles market, in the vintage market, is going to be sustainable in the next 5 to 10 years. It's not going to go away, guys. So if you feel that you have spare cash, I think it's very good to start listening to all these kind of information and start sourcing out. Doing your own research is important, but I think this is all factual data. Okay, so back to it. So now we have the whole stock market, which has been around for, I don't know, 40, 50 years, maybe even 100 years, right? The next thing we have, to me at least, something very relevant, okay, is the crypto market. The crypto market really, I would really say, took off maybe the last 5 years, okay, where everybody started to everybody, I would say that this is only 2 to 5%, less than 2% of the population. Because if less than 1% of the population at the time when I stepped into crypto was holding Bitcoin, right now people are saying that it's about 5% holding Bitcoin. Now the question is, why people are holding Bitcoin? People are holding Bitcoin because they are losing faith in fiat. Moral of the story, it's very clear. Okay, so I'm going to show a chart, right? Then it becomes more visual rather than me talking. So as you can see now, when you look at the BTC chart, right, why is it continuously having those parabolic spikes, right? This was the spike of 2017 and then 2018. But don't forget, when we went back down, we still held $3,000 per Bitcoin. Why is that so? Because the faith in the US dollar is no longer there. Hence, you see right now, Bitcoin is still sustaining 40 to 50,000. Now, obviously, there should be some kind of correction. At some point in the market, there will always be some pullback, there's some boredom, there's some fear, there's some regulatory issue, and then you have a pullback. That pullback could probably be anywhere from a 30 to 40% cut. But I would not really bang on anything back here anymore. I really feel that it's slightly more sustainable. Okay, I really feel that it's slightly more sustainable. But that being said, we cannot deny the fact that there are more institutions coming in holding the Bitcoin. MicroStrategy, you have Tesla, and of course, I'm sure that there's going to be more buying from the usual boys, right? Galaxy, digital currency investments, or is it with Barry Silbert's site, digital currency investment? I think so. So all these folks are continuously buying. Then you have the individual high net worth whales, right, that have been sitting on piles of cash, right, growing too conservatively for a very long period of time, still in old school private banking, old school family office, because don't forget, guys, when a family office or hedge fund is managed by the older folks, right, don't forget that when a private banking unit transitions to family office, they tend to be also relatively conservative, because they've been also boxed in a way that they are exposed to whatever their client is willing to invest in. So they kind of will expose them occasionally about, hey, you know what, there's something very interesting for you to find out, for you to probably look at. But probably speaking to an older individual, you tend to be less receptive, they're more conservative. But if you speak to perhaps their children, okay, who are in their 20s or 30s, and they're going to be taking over this inheritance, of course, or this portfolio eventually, right? Especially when their parents pass on, and this is left to them as a legacy asset, which is whatever, money, property, bonds, stocks, whatever they have. Suddenly they say, okay, I've heard my friends speak about Bitcoin, about crypto, about Pokemon, about Magic. And guys, The thing about what's happening right now, and this is literally what I'm seeing, right? So I was at a magic store yesterday, and you know, a very huge collection came in. Okay, this is all high-end alpha stuff. Okay, and I did pick up a few pieces, right? And the reason why I kind of had to do that, even though I know that it's in the higher range of the market at the moment. But why did I do that? Firstly, scarcity, which relates to Bitcoin, which relates to artwork, especially from prominent artists, right, who have either passed on, and you know that there's only so many circulating pieces in the world. Why are people always so crazy about Bitcoin, 21 million Bitcoin? It's very simple. As long as there's literally no way to replicate, right, that particular asset class, the more people were covered for it. So when I saw that collection coming in, I told myself, regardless of whatever ungodly price it was, I had to pick up at least a few pieces of what I could afford to part with, right? And knowing that, yes, I may not make any money now. That was the same mentality that I had when I went into Magic the Gathering 2 years ago, back in May 2019. At that point of the market, if you still remember, it was still relatively bearish for the altcoin space, but very, very bullish still for Bitcoin, right? Because Bitcoin was still actually on an long-term uptrend, just that it had a very sharp technical correction, right? So I stepped in, telling myself, okay, I know for a fact that these cards or these collectibles are very hard to come by. A collection of this magnitude, and we're talking about, okay, what's the magnitude of this collection? Easily $200,000 to $300,000 worth that came in. And you must understand, okay, first and foremost, Singapore Singapore has whales, by the way. It's just that you don't know when they decide to liquidate. Okay, it's not like the US or in Europe where it's relatively easy to find communities buying these cards. It's not easy, guys. So the moment that came in, I told myself, firstly, I could always find it cheaper on auction houses on Facebook, or perhaps try to look for friends internationally. But then again, they may not have everything all at one go, and I cannot inspect and verify the cards on the spot, which I already know how to do now. So that is the premium that I'm willing to pay because of that convenience and that safety. Don't forget, at the same time, when things come into Singapore, there's always a 7% goods services tax. So that, and I'm also worried that the mail, it could get lost in the mail, guys. And you're talking about a few grand to 5 figures to even 6 figures here that could be transitioning through air, right? Usually by plane. I usually FedEx my stuff in. So that being said, since this large collection came in, I picked out a few pieces. So basically, if you're wondering, right, these pieces are going to only rise in value over time. Okay? So the alpha cards, beta cards, they're only going to rise in value over time, guys. These are all reserve lists. You also have collector's edition cards that are going to rise over time. Okay? Right? These are going to rise over time because there's not many pieces in the world left and circulating. So if you are not aware of why it's all related to the Nifty space and everything like that, and why the Nifty space, I feel, will have to go through a very sharp correction as well, because right now it's too hyped up. A lot of people are buying, and there's no real time horizon that has allowed the market to really mature. You see where I'm coming from? So when you buy into something too new, okay, so these cards, guys, are 27 years old. Whatever you see here is 27 years old. I only go for old school, okay? I only go for vintage stuff. There's nothing in my collection that is 1 or 2 years old, okay? I may have bought them 2 to 3 years ago, but they're definitely not new, okay? The market itself is a mature market. It's here to stay, right? A lot of people are saying, okay, when people like myself or the older generation die out, all these old school cards are gonna go to zero. Guys, first and foremost, there will always be new people coming in who have bigger bank accounts and they're willing to spend. So in the past, just the past 2 to 3 months alone, we've had within Singapore, a small country, right? People buying these collections, not knowing exactly what they are, but it was recommended to him. And these people are in their 20s and they're willing to spend 100 grand on Magic the Gathering cards that they don't really know, but they're willing to diversify a portion of that wealth. However they got their wealth, I really wouldn't know, right? It could be through really hard work, selling off a company, flipping that company for a few $1,000,000 to tens of millions of dollars, and now having a little bit of assets, just 1 to 2% trickling down to something that interests them. So that's why the Nifty market, right, as we know now, that is very popular. And recently, Gary Vaynerchuk started to talk about it, right? And that led to the whole interest in Mana, which is Decentraland, into Flow, into Engine Coin. Suddenly, the whole market spiked, right? So you had this spike in those tokens. But unfortunately, don't forget, these spikes are usually not very sustainable. Okay, and for now, I would say that it's very hard to relate that actual tangible thing. So I'm more of a tangible asset kind of guy. If you want me to be very frank, because of my age group and my responsibilities, I have children, I tend to veer towards the more tangible stuff. Whereas the virtual side, there's still a lot of things that are undetermined. For example, when I buy a Nifty, let's say, okay, I was researching all the Nifty related stuff. Okay, so the artist will basically create the piece of art, right? Whether is it digital or actual physical piece, he will then put up that piece on a marketplace. Okay, so when they put it up on the marketplace, you start bidding for it, you pay in Ethereum, and then you either get it delivered to you, the physical art piece, or you actually just have it as a digital format where you could potentially show it off anywhere in the world, right? So I feel what is going to be exciting is the part where you can show it off. You see, guys, let's just put it this way. These cards, I can keep it in the binder and nobody will know about it, right? But I choose to show it, right? Because it's a playable game. It's not like it's very different, you know what I mean? Nobody walks around and wants to show off their Bitcoin wallet. You know what I mean? I think that's just purely dumb. If you have an X amount of Bitcoin, you just don't want to show. But these are like a little bit more subtle. It's like wearing a Rolex watch, a Patek Philippe, right? An Audemars Piguet, right? Or a high-end tourbillon. It doesn't matter. There's still an element that you want to show off. And people are like that. People want to at least have some recognition, or at least they want to wear something or have something that they feel happy to hold. Like for me, I'm just happy to own pieces of history. And I used to play this game. So there's a nostalgic value. So another thing that the Nifty market needs to build is nostalgia. So in this era, 2021, if Top Shot, NBA Top Shot, if CryptoPunks, right, create some sense of nostalgia with the current generation, even CryptoKitties, okay, or Gods Unchained, I really don't know. It really depends on how strong they can keep the community together. It's just like World of Warcraft, right? That held the community together until they really messed it up with just the wrong direction, and just they became monetary hungry. That really split up the community. It just became not enjoyable anymore. When something becomes not enjoyable, it's usually because of the corporate direction. Because at the end of the day, everybody needs to cash out. Everybody needs to monetize their efforts. So you have to understand what's going on here. Why these old school cards may not be significant in today's younger market, but it's significant to the people who know what they are, is because don't forget, we became richer. We became more we became more influential. We became more willing to spend on such things, and we're trying to pick back the stuff that we couldn't afford last time. Like, guys, I could have never afforded all these things, right, back in the day when I was 13 to 14 years old. I didn't have a lot of money. I don't have rich parents, guys. There's no freaking way that I would have ever owned them. But I would always see the richer kids having the ability to own them. So you see, just because of that very powerful factor, right? And for example, a 15-year-old seeing someone who is owning a NBA top shot card, right? And they say, wow, this piece is wonderful, but it maybe costs $2,000 worth of Ethereum. I'm like, where am I going to get the Ethereum from? I don't even have one Ethereum. Okay, so that translates to the future, right? Where when the individual grows up, they see that the market is more mature, and of course, assuming that NBA Top Shop is still a thing, right? That person will say, hey, this is still available. Maybe it has evolved into something else, right? It could be something more interactive where you can trade, you can interact with that particular virtual item. You can show it off somewhere, like literally there's a space for you, maybe a billboard sign next time, and you can just put it up there and then say, okay, I own this piece. And it's a digital signature that everybody knows that you have it. You know what I mean? So that makes it very, very interesting for me, because obviously nobody can publicly see this. The reason why you can see this is because at least I still have a channel I can like kind of show it off. I maybe have an Instagram that I can show it off. But imagine next time having that ability, because it's digital, right? And there's maybe, you know, in Times Square, and you know, there's a small time slot for you to put it up and to show the world that, wow, I have this limited edition one of one LeBron James or, you know, Kobe Bryant card, right? There you go. See? Suddenly that wow factor, that one, and we will always want something that we will always aspire or want something that other people have. Okay? It's just very normal. It's very, very normal, guys. It's nothing wrong to admire what someone else has. It's just that you don't want to get greedy and, you know, do bad things to try to attain it. But when you reach that stage in your life and you kind of identify it, like, why is having a Bugatti Veyron a big deal? You know, why having a Rolls Royce eventually in your older years when you're more successful is a thing? Maybe buying your first Mercedes Benz is a big deal. I don't know, whatever it is, or owning a landed property, stuff like that. So all these things are all going to come together eventually, because we know for a fact that these, as long as they are human beings, basically, we will always cover all these very unique, cute little things, I would say. They're cute because, firstly, if I go up to my grandfather and said I paid, say, $300 to $500 for this card. By the way, this is already a $800 to $900 card. Okay, easily. Or even $1,000. He will slap my face because to him, this is a piece of paper. Okay? But no offense, Grandpa, because you paid an X amount for a stock certificate back in the day. Correct? Whether that stock is still around, I wouldn't know. But he felt that that was of value at the time. But I feel this is of value of my time. And my daughters, who are, you know, really young at the moment, right? They will find something valuable and they will look at Daddy's collection and say, Daddy, what the heck is all this? It's so funny. It's so silly, you know? Why are you, you know, if they even know what is value or what is the term value. Buying tokens are also pretty silly to a lot of people, because firstly, tokens are just very easily transacted in the market. Yes, we know the use cases, we know the purposes, but it doesn't mean, right? It doesn't necessarily mean that people, right, from another era, from another generation will value it the same way. So as long as, okay, so just to summarize very, very quickly, and what you kind of want to look at is that A, how mature is the market? What kind of key or target demographic group are we attracting? Okay, you have to identify that. I think moral of the story is that you want to identify whether or not the market has a deep enough pocket. If that market has a deep enough pocket, the strong hands are here to stay. If you have a market that is attracting relatively young individuals, right, I don't think the staying power is there. It's highly speculative, and yes, there will be crazy exorbitant prices still traded in that market, because at the end of the day, you never know what's the intention behind these large purchases. So I want everyone to be more careful. Okay, I just want everyone to be more careful, because I don't want people to start throwing in, leveraging. Okay, so leveraging and taking on credit card debt, taking on personal loans because you have no asset. Of course, the only thing that you can guarantee is on your personal income stream, right? And what happens is that when you step into these markets, for example, and this is also relative to the magic market, people have taken credit card debt, personal loans just to speculate on the reserve list cards for Pokemon, Yu-Gi-Oh, right? Now the new Flesh and Blood, right? So when they take on that, or they take on more credit that they don't have, or they just take on more credit, right? That they don't have. They don't have it. There's no way that they can pay it off in a short period of time, right? And the market suddenly corrects heavily, 50%, 80%. Suddenly, they will panic because they still owe the bank, right? Or friends or family, or worse still, a loan shark, right? This X amount of money, right? And the clock is ticking. They did not know how to liquidate. So that's why liquidation is also very important. For example, liquidating a large amount of tokens, right, would depend on the volume for that particular pair, correct? So you and I already, we identified that. But what about liquidating large collections like the one I did? Let's say if I had $100,000 collection. Unfortunately, if you want to liquidate it completely, it isn't easy to find someone, and you have to build up some level of credibility because nobody knows who exactly you are. That's the thing about the collectibles market. Nobody exactly may know who you are to trust you enough to authenticate your collection. So from there, you have to send in that whole large 100K, 200K collection. Even $50,000, $10,000 is not big. It's not small money, guys. So then you have to ask yourself, okay, shucks, I can't really liquidate a 100K position as of now, right? Because I don't know how. I haven't built enough credibility and nobody recognizes me on that level. Yes, you see where I'm coming from, guys? So every market has its own unique ways of liquidating. So why the Nifty space is still relatively popular? Because, hey, nobody needs to know who I am as long as they are able to verify and know that, okay, this piece is an original piece from this artist, or it's an actual authentic piece from, this expansion or addition. Okay, there's no doubt about it. There's no, you don't have to worry because the blockchain already verifies that this is a authentic piece. So you just have to transact. And that is why, of course, a lot of young people will love that, right? They don't have to build any credibility. They just have to go in. I have the money to buy. I buy it for $10. Next week, I can flip it for 100. But where's the sustainability in that? What makes it special then? Seriously. It's just the willingness for the next person to buy higher. That's all. But to me, it's very little nostalgic value. There has to be some kind of nostalgic value in these things. Okay? There has to be some attachment from the community, from an individual, to allow that person to buy it higher and higher as the market matures. So take note, if you're venturing into the whole Decentraland where you're buying virtual space, creating your own virtual empire, buying virtual items, please try to understand that if you're building a portfolio of something, you have to have some attachment, like literally some emotional attachment for you to have that, to convince yourself that A, you've done the groundwork that this game, for some fact that it's going to be here to stay. This market has to be here to stay. Magic the Gathering had many times when everybody was saying Magic is dead because there were just some directions of change. The whole landscape changed. You lost some friends who no longer want to play. They moved out of the state and you are left alone. You decided to dump your collection because there was no one to play with. The other side of the story is that you have people who moved on to other things, other games, better things that came about. Same thing. Why Bitcoin, right? People always say Bitcoin is dead. The whole crypto market is dead, just because of a serious dump. Crypto is here to stay, guys. Bitcoin is here to stay. There's no doubting it, really. Like, if you continue to still doubt it, you're just a dumbass. You're really a dumbass. And you obviously don't know enough about the market to make any real well-informed decisions. You're just saying it because the newspaper said so, or just because Bitcoin dumped from 50K to 20K, or it's going to go to zero. So, I mean, I've heard all this kind of crap, and, I'm still in the market. I don't give a shit about. And that's the thing. Nobody gives a shit about. Once they know for a fact that it's going to be here to stay, the money is only going to plow in at every single dip. Okay, moral of the story also, once you're convinced, for a fact that US dollar is going to continue to go down, you still have a job, you still have a business, you still have income, you have been managing your liabilities very, very well. You only want to build positions in the markets or asset classes that you believe in. Simple as that. There's no turning back. For me, I'm not stopping my purchasing. I'm going to be more conservative in what I buy. Of course, now when it's a more inflated level, but it doesn't mean I stop. I will definitely still be continuously buying because I understand that the market scarcity is just there. It's just there, guys. It's like there's no way that you can replicate this kind of stuff anymore. It's the same thing that you can't replicate Bitcoin. You can try to find other alternative coins that will give you that speculative uptrend, but everybody eventually moves back to Bitcoin, Ethereum. They will just keep building it. Obviously, there are other ecosystems that are doing pretty well. Dot, Cardano, you have the Algorand, you have HBAR, Hedera Hashgraph, all starting to gradually pick up. But will they stand the test of time? That's the gamble that we must all be willing to accept. That is the gamble that when we put our money in, when we buy, say for example, when our forefathers, for example, one grandpa decided to buy his land somewhere on the outskirts of town, okay, but only 20 years later did it become valuable, whereas one grandfather perhaps decided to buy in the centralized area of town, and nobody knew, right, where will exactly be the prime area, and that became the tourist attraction spot for the world. That became a 20 to 30x property in say 10 years. You see, there is a difference because your choice and where you park your money is very important. And to me, obviously, the more money you have, the better, because you have more margin for error, right? Because when we don't have enough money, we can't really stretch as much. We have to be just more careful. But when you have more money, you can start diversifying and parking and see, maybe this is not too bad. Maybe this asset class is not too bad. That's how you find out. You need more money, guys. It's always just the way it is. And why we need more money? How are we going to get more money? Obviously, through investing. We need to find avenues to park our money and not have it kept in the bank. The more you think about the banks are going to help you out, no, they're not. They're going to only help themselves out. It's never been very beneficial for you, okay? So, moral of the story, guys, start hunting for alpha. Really, seeking alpha is very, very important. And the market that I'm familiar in so far is the crypto and, of course, the collectible space. I'm very comfortable with holding all these things. I'm so much more of a purchaser and hodler. I rarely even sell my cards because, like I said, I'm at a stage where I feel that holding it benefits me more than selling it off, right? So for crypto, of course, I do both. I invest in companies. I also trade cryptocurrencies. But at the end of the day, like I said, these markets, right, when you kind of identify that they're here to stay, stick to it, right? And be willing to accept the volatility that comes with it. Don't slander it too quickly, right? Don't slander it too quickly. Yes, nobody loves losing money, right? Or buying high. It makes you feel stupid. But if you strongly believe that something is it's gonna eventually turn a good ROI, stay with it, stick the course and stay the course. All right, guys. Thank you so much for watching, and I'll see you